Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Community video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder of Tunic Pay, Nicky Goulimis. Great to have you with us.
What a pleasure to be here. Nice to be on the show.
All right, so before we get cracking, we're going to learn a little bit more about Tunic Pay. So, Nicky, you're pretty early stage, so you may not be on everyone's radar just yet. So why don't you tell us from the from scratch, what Tunic Pay is and what it does?
Yeah, for sure. In short, Tunic Pay is a company for scam prevention. So we work with banks to help protect them and their consumers from the growing problem of scams.
Okay, and how do you do that?
Sure. Effectively, we do that by providing data on the transaction context and the other side of the transaction, so that banks can actually understand what's going on. Because if you think about it structurally, the problem of scams is a problem of information asymmetry. One bank knows everything about their customer, but they know nothing about the other side. And they would love to know that, hey, Nicky is sending money to a 17-year-old's bank account who opened his account 2 weeks ago, or conversely, a great account that's existed for years and has reasonable patterns of transaction. And is those elements of exchanging information on what the transaction is and who the other side is that enables us to stop the challenge of scams.
So you're kind of looking for patterns to work out, who and where the scammers are and what they do, so that you can effectively warn all of your customers, among them banks, that, these are people that shouldn't be on the receiving end of money, that kind of thing.
Yeah, exactly. And I would say it's actually often, it's not that black and white, right? Like it's not just, by the time someone's been a known bad actor, they have usually been kicked out of the financial system. The problem with scams is that, people are creating sort of new accounts, new identities all the time. And so you need to sort of make probabilistic determinations on the context and the other side of the transaction. And right now, pretty much nothing happens. The bank hits send on a transaction and it disappears into the unknown. And in many ways, it's a feature of payment rails like real-time payments that there is no data being collected. Whereas in the world of cards, where we see a lot less scams, there's a lot more data being exchanged along the way.
I have to say, I've been getting a lot more in the UK. I've been getting a lot more warnings from banks whenever I send money, even to myself, which can get a little bit tedious, but I understand where it's coming from. But we'll get on to kind of the broader picture a little bit later, because I want to ask you a little bit more about Tunic Pay, which is, maybe you can give us a sense of, as I said, you are quite early stage, but how far along are you in terms of funds raised, big client wins and the like that you can share?
Yeah. So we started the company about a year ago, and it's been a bit of a crazy year at that. So, you alluded to warning screens, et cetera, changing with banks in the UK. When we started the company, it was before any regulatory change in the UK. It was focused around supporting banks with scams independently. But it's been a bit of a lot of demand on the market given the shift in liabilities, which I suspect we'll talk about. And so, we started the company a year ago, raised about $6 million in financing. And I can't share any customer names publicly, but we are really fortunate. We're working with some of the tier one banks and some of the largest neobanks in the UK, nothing international yet. So it has been kind of a crazy running start.
Well, that sounds very promising. And what are your plans for the future? You said no international clients just yet, but some tier one banks that you're working with already. I guess hopefully more of the same in terms of tier one banks and going international.
Yeah, there's definitely a more of the same element in terms of, we're just at the stage of having a few great early customers. And now, as we start looking to 2025, the focus is scaling within the UK. But as we look longer term, there's definitely the cross-border piece and the international piece that is relevant. Cross-border payments are also a place where there is sadly a lot of scamming and also, other geographies. We've had sort of informal conversations with banks in the Netherlands, in Australia, in the US in particular, and there is kind of focus on protection from scams and managing that. So definitely a component for us. But the other piece that's become really interesting for us in the last few months has been looking at other payment rails, not just real-time payments. So I did emphasize earlier sort of the problem of scams is a problem or is associated a lot with how real-time payments have been set up, and that money is sent instantly and irreversibly with no dispute, no chargeback, no data exchange along the way, no sort of authorization. happen. But scams exist on other payment rails too. So we're actually starting to do some stuff in crypto, potentially in cards. And a lot of that is just customer led. We're finding that some of the banks that we work with want to solve scams, not just for faster payments here in the UK, but also other rails. So I think the tension for us will be kind of choosing between international versus broadening the payment rail offering.
Okay, and just briefly, given the backdrop of the fintech space, which is still not, I don't want to say firing on all cylinders, but certainly hasn't got back to the heights that it was at a couple of years ago. I would imagine many people have told you must be mad to be starting a fintech right now against that backdrop. How tough has it been? Has it been a great time, as crises sometimes can be, to start a fintech? I note that the regulatory backdrop, certainly in the UK, seems to be very much in your favour. I don't know which came first, you or the change in UK regulations.
I think as regards starting a fintech, it's probably a great time in a number of ways. Well, one, public markets haven't fully bounced back, but it has been, 2024. I think overall, most fintech indexes are probably 50% up and so forth. And, I think when you look at companies at our stage, of C stage, Series A, et cetera, valuations haven't been hit that much. There's a lot of opportunity to fund great ideas. I think it's the growth stage that's still really hurting. So in many ways, it's a great time to start fintech. Is fintech as attractive of an asset class as it used to be? Maybe, in 2021, I think fintech was 25% of all venture funding. I think that number has probably come down quite significantly as other spaces become more relevant. But, ultimately, fintech, financial services remains everything. I think, we're still in day one in terms of, every single company touches payments, engages with financial services in some way. There's such an explosion of innovation. This week we've talked a lot about stable coins, but also as we look at, central banks launching their own tokenized digital currencies, innovation in cross-border, 1033 just hitting in the US, and kind of the real potential of open finance and new bills all over the world. I would argue it's a great time to be in fintech. So come join us, listeners.
Okay, so we've heard about Tunic Pay. Let's now learn more about Nicky. So, Nicky, this isn't your first rodeo. You also co-founded Nova Credit. How much harder or easier is it to start a fintech second time around? I guess some people will have had failures before. You had a success before, at least one. So is it easier? Is it harder? Is it just different?
When I last started a company, I was like 26 years old, and everything had no idea about anything, was banging on a lot of doors cold and things like that. And so I certainly recognized that it's a privilege to now be starting another company in my mid-30s with a bit more of a network in fintech and financial services. So in some ways, it's been a lot easier, and also I've had a bit more experience of doing a company before, so I probably waste less time thinking about random things. I don't spend a weekend being like, do we suddenly need product marketing? I probably focus on fewer things and panic about those. So I do hope and think it's, broadly speaking, easier. But I think there's also a big danger that a lot of second-time founders fall into, of sort of being complacent, of assuming that you know too much. And as I look back on the last year at Tunic Pay, there have been a couple of times where I've fallen prey to that trap of assuming this is the way that I did things before, and therefore this is the exact same model here. And so retaining creativity, I think, is the most important thing. And frankly, the other thing I would say is that I've been going to fintech, financial services conferences, fora, et cetera, for years now. And yet I had always worked in credit. I had never touched payments before. And so, did I even really know what real-time payments was 2 years ago? Probably not. And I remember I'd go to all these conferences and everyone would be talking about payments. I'd be like, boring. I only want to think about credit. And so I think as a founder, maybe one thing we don't talk about is how myopic you become, because your job is so much about pushing this one very narrow issue and opportunity, that you become very functionally diverse, but I don't know that you always become as subject matter diverse within fintech. And sometimes I envy people who have had the opportunities at bigger companies to just kind of learn a breadth of areas across financial services. And I'm trying to hold myself to that more this time, to be learning more broadly all the time.
And if I'm not mistaken, entrepreneurship runs in the family. I think your father was a tech company founder as well. Is that
you've
something?
Done your homework.
Was he encouraging? Or was he like, whatever you do, don't do this? What are you thinking?
My parents are very encouraging, but they didn't allow me to pursue my dreams of becoming an actor age 16. So, I'll still hold that against them. No, joking aside, they've been fantastic. And actually, my mother is a professor of computer science at Imperial College in London. And she does a lot of stuff around security protocols. And so we are scheming right now whether there's a way for us to collaborate on some of the work that we do at Tunic Pay, which would be a rare delight.
Well, sounds like a very useful and helpful parents to have when you're
great Saturday night dinners.
Yeah, and I mean, when you're not discussing work, I guess you can discuss work with your parents as well. But when you're not at Tunic Pay, you're doing other things. I mean, is it all kind of like family focused, no time for anything else, or are you climbing mountains at the weekend as well?
I would love to climb mountains. I used to do a lot more of that. I have 2 young kids, so they'll sit in a backpack for a little while, but not as long as I'd like them. I like to bike ride. I like to read, but I probably have quite a quiet life at this stage.
Okay, well, I'm sure that the quietness outside of work offsets the manicness of running and starting a company. But Nicky, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the co-founder of Tunic Pay, Nicky Goulimis. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, and now, Nicky, let's talk about the future of finance. So, Nicky, look, there are plenty of tech companies out there that designed to stop accounts being hacked or identity stolen and the like, but you're in the business, if I'm not mistaken, of stopping or trying to prevent authorized push payment, APP fraud, among other things, which just in the UK, I think amounted to something like $500 million last year. And certainly, a very big problem there. And I think I saw something like $10 billion in the United States, I think you were saying. How big a problem is this? And what forms does it tend to take?
How big a problem is actually a hard question. So what we do know is, as you said, $10 billion of losses reported in the US, about half a billion pounds reported in the UK last year. However, those numbers are pretty underreported. We know from various sort of analyses by nonprofits that operate in the space, and they're underreported for a number of factors. One is just like there's a huge amount of shame associated with being scammed. The other is that in most countries around the world, there's not much that your bank does for you when you get scammed, because the model is that fraud, which is where it's an unauthorized transaction, someone's stolen your identity, your account details, that gets reimbursed. But somewhere where you've been socially engineered, persuaded to make a payment, that until recently does not really get reimbursed by banks. And so there's not really been the incentive. And then, there's various things and various nuances and shades of gray around like what falls into civil dispute and other dynamics. But the fact remains that scams are a horrendous problem for consumers, and they take all sorts of forms. So, one broad category is sort of impersonation. I'm your CEO, send me money now. I'm your daughter, I'm in an accident, send me money now. And the other category is more of the illusion. Triple your money overnight with this great crypto investment, or buy this couch off a Facebook Marketplace that never arrives. And as a category as a whole, it's obviously a significant amount of loss, but it's also growing a ton. It's growing a ton because deep fakes are actually making this a lot easier. But also, if you just think about like agentic AI and the ability for fraudsters to now have 10,000 agents attack you from multiple different models, even just scaling their CRMs and scripts multilingual and things like that in the last year, it's a huge amount of potential. And at the same time, most of the modern payment rails that we've released around account-to-account payments have no protection built for this, and I would argue that it's one of the elements that's hindering their adoption.
Right, and I'm not ashamed to say I almost got defrauded for about £200 trying to buy a ticket to my football team, Tottenham. I saw an advert on Instagram, went to pay for it, and it was only because they didn't have a 3D secure system for the payment that Revolut blocked it, thankfully. And as a result, I didn't lose any money in the first place. But I think, as you mentioned, until recently, things were slightly different. But certainly in the UK, not just the messages, because every time I go to transfer money somewhere, I get a message saying, are you sure that this is the right person, even when it's to me and I've made the payment several times. But also there's new regulations, right, which are designed to ensure that if people are socially engineered, in your words, or duped by deep fakes or what have you to send money, that actually they're not on the hook. The bank is on the hook for, I think it's up to £85,000 to pay that back. How big an impact is that likely to have? Are people going to be kind of more carefree about sending money to anyone because they're going to get the money back anyway? How much of the onus is on the bank, and how much of the onus is on the consumer to make sure that they are careful with who they send that money to?
I think there has certainly been concern among banks that this would lead to an increase in some sort of collusion or first-party fraud, or even, your point around carelessness. I think the reality is that, getting scammed is a horrendous experience. And so I don't know that consumers will delight in and suddenly be totally careless with it. There's been some great studies by Nationwide and others around the emotional, et cetera, impact of what some of these scams, which can be really long run, do. And additionally, it's also money that ultimately is going to organized crime. And so it's a huge challenge there. I do think, the law change that you mentioned is singular in that since October 7th of 2024, effectively now banks are splitting the liability 50-50. So what's unique about it is it's not like, an issuer or acquirer where depending on what happens, one of them will take the liability and they might argue about it and sort of ping pong back and forth. Here, the dynamic is that both sending and receiving banks are responsible for the scam. And so that has created a lot of sort of new incentives around collaboration, but also around monitoring inbound transactions as well. And I think certainly it's also spurred a lot of the banks to look at not just the liability, but actual prevention. And I think, when you talk about these sort of warning screens around payments, sadly, the reality is that often they just really don't work. They reduce trust in the overall financial system. They're totally generic. People click through as fast as possible. And, at times that has been done to try and say, you, the consumer, should be liable. But the way the regulation is played out here in the UK, that's not something that the payment systems regulator or the FOS is really going to allow anymore. And so I suspect we'll see a shift from kind of generic, aggressive warning screens into more intelligent models, and hopefully the solution. I guess one thing I get slightly frustrated with is that some of the narrative around scams is we've made payments too fast, or we should slow payments down, and that's incredibly cynical and dispiriting. Fintech has done so much innovation over the last 10 years to make financial access greater, and we know that fast payments means better financial inclusion, means more velocity in the economy. It is a fantastic thing. And, we can do better than just saying, let's throw the baby out with the bathwater.
Right. And you mentioned deep fakes earlier. I think I saw one study by Deloitte saying that deep fakes were going to cost the global economy $40 billion by 2027 or something like that. Because obviously there's a lot of excitement around artificial intelligence, which in the fintech space and elsewhere has already started to, do much good, including with reducing scams and kind of spotting, fraudulent activity. Who would you say is winning right now, the bad guys or the good guys when it comes to AI and financial services?
broadly speaking, the bad guys, with a caveat. So one caveat is deepfakes, I don't think are being used at scale right now, because they remain expensive and challenging to produce on non-celebrities. So it's not that it's something that's being used all the time. The places where we're seeing it is in, highly famous CFO, extremely large transaction, still huge impact to the economy, but those tools are going to get cheaper and easier to use. And I think the future there is scarier than the present. But I think, again, just look at, there's a lot of talk about, why was the UK the capital of fraud and financial crime? And some of it has to do with the UK being the lingua franca of the world. Everyone speaks English, and including the fraudsters. That problem has been entirely abstracted. Like, I can translate anything in microseconds, charismatically, with nuance, etc., with just a click of a ChatGPT button. And if I also think about the scale of multiplication of targeting, etc., that can be done. Again, that is a huge weapon for fraudsters, where they're playing a large numbers game of just making sure that someone at some vulnerable moment falls for it. And so I think effectively with AI, right now we've handed fraudsters a bazooka. And I think banks are very early in terms of implementing any reciprocal sort of technology warfare on their side.
Okay. And I mean, just speaking more broadly across the fintech space, one of the trends we see in finance is a desire to make it kind of more sustainable in terms of the environment and its impact on society. Is that something that new fintechs always have to factor in now, or is that just consumer facing ones that want to kind of, align their values with those of their customers?
There are probably a whole range of different definitions of sustainability. And I think, in the UK, also the rollout of consumer duty as a sort of regulatory requirement has probably pushed the frontier for everyone in terms of sort of not just reacting to your customers' needs, but proactively identifying them and servicing them. I think that the story of fintech is of enabling payments that would otherwise not get made to be accessible. Like, that's what Stripe and Square and PayPal have done. Those are transactions that Visa and MasterCard were not servicing. And when we look at lending, I think, what Lending Club and Chime, and a bunch of the neobanks as well in terms of services have done is like a huge increase in access. And so I'm a massive optimist about what fintech can do. And I think often the infrastructure behind it is what powers that ability. There's been a very sort of depressing and damaging outcome around banking as a service, but still, like, what that enabled in terms of giving consumers access to new saving products, etc., is and remains really exciting. And so, I think fintech does a hell of a lot of good, and I also think we're only getting started.
Okay, and just very, very briefly, your headquarters is in the UK. You're in the UK right now.
We're in London.
You are, you're in London. You are Greek and a big champion, I think I've read, of kind of Greece as a potential startup hub. Is London still the best place to start a fintech?
Ooh, spicy. Well, there's a lot of debate in the UK, obviously, about this topic. But I think British people like to complain a lot. And fundamentally, even though there are gripes about entrepreneurial incentives in the tax systems and more regulators, I think the UK is a fantastic place to start a fintech company. And, if I identify some of my experience, like, one has been just like, I do think regulators are pushing innovation agendas. I think it's very dangerous as a company to just align yourself with, a law or regulatory trend. I think companies should be able to stand beyond those. And certainly at Tunic Pay, like, we started the company before the law change, and there's challenges that we serve that are independent of the liability shift. But I also think that the other thing that we've experienced has been just like an incredible talent base. So, the great thing about Revolut and Monzo and all of the crypto scene here in London is that it's created an incredible talent base to tap from, who are creative and fantastic to work with.
Okay, so look, let's crack on with our round of rapid fire questions. Are you ready?
No.
You're not ready. Okay, well, I hope you are. Okay, I'm ready. I've got 90 seconds on the clock. One word answers is all I'm after. If you don't have an answer, just say pass. And when the alarm goes off, we will stop. Okay, so what fintech segment has the biggest potential over the next 5 years?
Payments.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Cross-border payments.
Are bank bosses ready for the AI revolution?
No.
Are regulators keeping pace with all the new possibilities and behaviors in the financial industry?
Somewhat.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 1 being the lowest, 10 the highest, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? Out of 10?
10.
CBDC, central bank digital currencies, will become a mainstream reality in the United States and Europe?
I'm more bullish. Oh, you said one-word answer.
Out of 10.
6.
That you'll be able to open a crypto account at a top-tier bank?
Oh, 10.
That SWIFT will still be the main tool for transferring money around the world?
8.
And that a new card or non-card based rival would emerge to challenge Visa, MasterCard and the like?
10.
Very good. Well, on that bullish note, I'm afraid we're out of time for our round of rapid fire questions and our conversation. So I really just want to thank you, Tunic Pay co-founder Nicky Goulimis, for joining me today. Ευχαριστώ.
Ευχαριστώ.
All right, that's thank you in Greek, just because I like to show off how many languages I speak. Okay, I am part Greek actually. We will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.